Hi guys, welcome back. This week we are talking about hotels and operations of hotels, and I want to go into a little detail about some of the concepts they cover in the chapter that are a little higher, a little more confusing. Okay, so first I want to talk about management contracts. A management contract is when a hotel company builds a property, sells it to a new owner, and then is hired back to manage the hotel, basically. Not that it always has to be the same parties, but basically that's the concept. So let's say a bank wants to own a hotel as one of its assets. So the bank, let's say Marriott, would build the hotel. They would sell it to the bank as an investment. And then the bank would hire Marriott back to manage the hotel and run it. So the bank doesn't know how to run a hotel and has no interest in doing so. They want Marriott to run it because Marriott knows hotels. So they're just the financial owner of it. Marriott runs it, puts their flag on it. Everybody thinks it's a Marriott. They don't know that the bank owns it. And it's a win-win for everybody involved because they do what they do best, right? It also is an advantage for Marriott because they can expand their brand without having all their capital tied up in the properties instead of owning them. They can have money to go and then build more properties. So it's a win-win. What is a, no, we did that one. What is a REIT? So a real estate investment trust, REIT, is a financial trust whose assets are at least 75% real estate. So the trust owns properties and the shareholders buy ownership in the trust and therefore are partial owners of the properties, but they have no responsibility for managing or running the properties. The trust is just the owner of the properties. So it kind of is a benefit to people who want to invest in hotels, but they don't want to have any part of the operation. They just want the financial benefit. So that's what a real estate investment trust, and it isn't just hotels, it's other forms of real estate as well. But in order to count as a REIT, as a real estate investment trust, it has to be at least 75% real estate. Okay, what is a franchise? So just like in restaurants, like you're familiar with McDonald's, Subway, Firehouse Subs, there's lots of franchise restaurants out there. So that is the parent company owns the brand and may own some locations, and then other locations are owned by individual franchisees. So basically, there's advantages and disadvantages to the structure. We'll talk about those in a minute. But basically in the hotel world, let's use Motel 6 as an example. So Motel 6 would be the franchisor. And then let's say me, I'm the individual owner of the Motel 6 here in Moore Park. Okay, there isn't one, but hypothetically, right? So as the franchisee, I get to benefit by using the name and the logo of Motel 6 and all kinds of other benefits, and I pay them money to do so. So we're going to talk about that in a second. So a franchisee could be just one person like me, or it could be a company that I'm an owner in that owns multiple franchises of, we could own 50 Motel 6s, we could own some Motel 6s, we could own some other hotels. Sometimes there's non-compete agreements where you can't be an owner in multiple hotels because they don't want you sharing trade secrets across the brands. Same with restaurants. Like I know people who own Pizza Hut and Subways because those don't compete. They don't care. They're not going to share something, but they probably couldn't be allowed to own Pizza Hut and Domino's because those are competitors, and it would be counterproductive to have one owner owning both, restaurants that are competing. So that's up to the company what parameters they want to set on who they'll allow to be a franchise and what other investments they can have. But anyway, I digress. Let's talk about advantages and disadvantages of the franchise relationship, okay? So first we're going to talk about the franchisee. So that's me, the individual owner, the person or company who owns the actual hotel, not the big parent company that has the name, okay? So the advantages to me would be brand name recognition. Obviously, you know the name Motel 6, so you know kind of what's associated with that, as opposed to just Christie's Hotel, where you don't know what you're going to get. You have an idea of with that name brand association. Shared advertising and registration or reservation systems. Basically, you get to take advantage of the fact that there's hundreds if not thousands of these hotels across the country. So the advertising can be shared for all of them. The same central reservation system can be used for all of them from the central website, those sort of things. Standard design plans for property construction and appearance. Basically, they have kind of a look that, you'll see a Motel 6 built within certain years is going to look similar to other ones built in that time frame. So they kind of take out some of those costs of the architecture and the design and things like that, so that there's a standard look. And again, that keeps it consistent for the customers, but it also saves on costs for the franchisee. Another benefit is standard operating procedures for customer service, housekeeping, maintenance, all of that. They're going to have manuals on how our customers should be treated, how our front desk staff should check in guests, how they should handle issues, how the housekeeping should do their job. All of those systems for actual operation of the hotel are going to be simplified and consistent across the board, so you don't have to reinvent the wheel. And then another advantage would be access to company-wide purchasing discounts. So a company may say, okay, we know there's thousands of Motel 6 owners, but we know they're all going to want the same consistent product. So we'll offer them a discount because they're all going to buy through us, that sort of thing. So some disadvantages to the franchisee. Again, disadvantages to the individual owner or company that owns the individual property. They have to pay their fees, obviously, to the franchisor. So they're generally going to pay a fee up front, which could range from $10,000 to over $1 million, depending on what the company is. And also throughout operation, they're going to pay fees on their income, on their sales. So those are generally called royalties. So that's the fee that comes out, biweekly, monthly, quarterly. It depends on the company how often they take it out. Another disadvantage is that fees are based on sales, not on profitability. So hopefully you understand the basic concept of profitability, where I sell a hotel room for $100 a night, but I have to pay my expenses, right? I have to pay the utilities, the water, the electricity. I have to pay my staff to run it, clean it. I have to pay, for the laundering service, for all the linens, all those sort of things. So there's different expenses I have to pay to sell that room out, right? So if I'm really good at running my business, my expenses are hopefully low and I profit all of what's left. So let's say I pay $50 for all my expenses and I charge $100 for the room, that $50 is my profit, right? So Motel 6, the franchisor, is going to take their set percent. Let's say it's 5%. Whether I make $50 on that 100 or $20 on that 100, they're still taking $5. So I have to run my business profitably in order to make any money, because they're still taking that set fee. And then another disadvantage to me is that I have to conform to all the standards. So they're going to say I have to do everything by the book, everything their way, and so on. That can be challenging, but obviously it's done for a reason, so that the guest has a similar experience at every Motel 6, but it's a challenge. So now let's talk about the franchisor. So this is Motel 6, okay, in this example. So advantages for them: they get increased market share and name recognition. So because there's more of their properties out and they don't own them, but their name is out there, they get greater share of the market. People know them, people see them around more. Also, again, where we talked about the fees being set and not based on profitability, that's an advantage for the franchisor. They're going to make their 5% no matter what. Even if you're running your business terribly, I'm still pulling 5%, right? So disadvantages to the franchisor: finding quality franchisees and ensuring that standards are maintained throughout franchise properties. So that's going to be the hardest part, is finding people who are qualified and capable of running these hotels for them, because their name is on the line with these people operating for them. And just making sure that they're doing everything the way they are supposed to. So you have to have some sort of structure in place to send people out from corporate to make sure that things are being run properly and do audits and that sort of thing, or else you're going to be in trouble with people not running things the way they should be. One last concept I want to cover is vacation ownership. So you've probably heard about this in the form of timeshares. Most people call them timeshares, but there's a lot of names for it, vacation ownership obviously being one. It's basically when an individual purchases ownership in a fraction of a hotel or a resort. So to simplify the concept, let's say that a hotel has 100 suites, okay? They have 100 rooms, and then each suite can be occupied for 1 week at a time. And there's 52 weeks in a year. So you have 100 rooms, 52 weeks, you get 5,200 shares of that property that you can sell off, right? So the guests would buy one share, 1 week in this property, and then each year they'd have the opportunity to book that week and stay at that property or to exchange it. So once you exchange it, you can either trade it for a different week at that property, or you can go into a greater exchange, which involves other properties, and trade for a week at a different property. You probably heard of some of the exchanges. There's like RCI, Interval International, Wyndham has a big exchange. There's a lot of kind of these groups where you can kind of put your week in and get a different week out. And so with the exchange, everything has to be sort of valued. So my week, if I own a week in January right near a ski resort, that's a great week, right? Because everyone wants to go skiing in January. If I own a week at that hotel in August, maybe there's not as much to do there and it's not as desirable. Excuse me. So the August week won't be worth what the January week would be. And same with other properties. There may be, properties on the beach, and there may be properties a mile from the beach. And, they're going to have different values depending on what amenities they have, what, level of service and all that sort of thing. So there's different systems to rank the weeks and prioritize which ones are higher valued than others. But basically, you have the option to, generally book a week, or sometimes you have the option to get points and break those points up into a few smaller stays throughout the year. So you could stay for a few weekends instead of a week, and those sort of things. But the advantage basically of vacation ownership is that you pay up front. You have a set fee you pay every year. It's basically like a mortgage because you own that piece of the property. So you pay your mortgage into the property you own every year, and you have the opportunity to travel other places. Either you have the opportunity to travel there every year and you already paid up front, or you have the opportunity to trade it and travel other places and already know what you're going to pay because you already paid it. So that's a huge advantage for people who like to travel. The downside, obviously, is that if you don't use your week each year, either you lose it or you may have to pay fees in order to extend your window when you can travel. So there's challenges there. So the last thing I want to talk about this week is guest experience at hotels. There's a wonderful story about an experience a guest had at the Ritz-Carlton. And so if you read below, you will see more information about that and a little video that the guest made telling about his great experience. All right, let me know if you guys have any questions. Have a great week.